is like enriched uranium. You need a crypto reactor to create credit. So for every dollar of equity capital, of Bitcoin capital, you can create about 10 to 20 cents worth of digital credit. So if you have $100 billion worth of Bitcoin capital, you could create $10 to $20 billion worth of credit per year. You would need a public company. It would need to be exclusively invested in Bitcoin. So if a bank wanted to do this, they would need to create some structure that has $50 to $100 billion worth of Bitcoin held in one entity, and then they would have to go do an IPO and take a digital credit product public. If they were to do that, we would welcome that, because that would mean that another big company is buying $100 billion of Bitcoin, and I think that would be good for everybody in the Bitcoin space. If that were to happen, our Bitcoin price would go through the roof. We would end up inheriting another $50 or $100 billion worth of Bitcoin on our balance sheet in short order. Right?
Yeah.
So it's not a bad thing if they copy us. It's just unlikely that they will, because if you're a bank, your choice would be, I can invest $100 billion and create my own digital credit instrument like STRC, or I can offer digital money accounts to all of my customers to pay 8%, and I can power it with STRC, and I can keep 200 or 300 basis points of the money. So I could collect $100 billion or $1 trillion of other people's money. I could make $3 to $30 billion a year with no risk.
Right. Yeah, that makes sense.
And I could do it by partnering with Strategy and buying STRC, and I could do that starting tomorrow.
Right.
Or I can create my own crypto reactor, and I create my own. And I think, to be clear, there will be more digital credit. SATA is a very successful digital credit instrument offered by Strive. It's not as big as us. It won't have the same amount of liquidity, right? So we will simply provide the most liquid, most well-known digital credit. And if 10 other companies create other digital credit instruments, that's probably good for the ecosystem. And there are some people that will always want to diversify. They'll want 2 or 3. And there are traders that will want to trade in and out. They'll want to buy SATA, sell it, buy Stretch, sell it, etc. So I think it's good to do it. I just think that the real key here is, if you want to create the ideal credit instrument, you would like to sell $10 billion of it, and that means you need to back it with $50 billion of equity capital. And then, if people like it, you might get to $1 billion of liquidity, right? So you're trying to get to $1 billion of liquidity a day, 10, 20, 30 billion of AUM, backed by $100, $200 billion worth of equity. It's a scale business, and we happen to be fortunate enough to have entered the business early and inadvertently created the scale, which now is a big competitive advantage for us.